Okay, so it's 12:32. I think we've given everyone a couple of minutes, and people who come in a bit later, we can they can hopefully catch up pretty quickly. But I'd just like to welcome everybody to our webinar for 2021, where we'll be delving into the trends and opportunities in client service for accounting firms. This is based upon survey data from FirmChecker over the past 6 to 12 months. And really the theme of today's webinar is what the data says about marketing your firm and client service in your firm, and what are the opportunities for you. So by way of introduction, I'll get James Noonan to introduce the webinar and introduce Accountancy Insurance, who's supporting the webinar today. Who's also a big supporter of the Client Choice Awards, where a lot of this data comes from. James, over to you.
Thank you so much, Ben. And I'd like to thank both yourself and George for giving Accountancy Insurance the opportunity to sponsor today's webinar. So at Accountancy Insurance, we're always looking for ways to support the accounting industry, and that's why we're so happy to partner with you and with George today to provide this information that is very relevant and very interesting for accounting professionals. I'm really happy to see such a high number of clients attending today, and to them, I extend you a very warm welcome. For those accounting professionals that are not currently working with us, I extend you an equally warm welcome, and allow me to give you a little bit of a snapshot into who we are and what we do. So our story started back in 2003, where an accountant frustrated with how much time was being written off due to government-initiated audit activity created now what is the leading tax audit insurance solution in Australia. So the primary objective at Accountancy Insurance has and always will be to assist accounting professionals and their clients. So our tax audit insurance solution, Audit Shield, is utilised by thousands of accounting firms, not just here in Australia, but also in New Zealand and in Canada. Do not be a total mess, avoid the ATO stress. So Audit Shield covers professional fees normally charged to your clients when responding to audits of lodged returns from the ATO and other government revenue authorities. So without Audit Shield, accounting firms and their clients experience additional stress caused by ATO audit activity. So really, Audit Shield is a win-win, no net cost, no loss solution for you and your accounting firm. And we don't only offer Audit Shield. Our other suite of offerings include our professional indemnity insurance. So I encourage all to make us your first resort, not your last resort when it comes to professional indemnity insurance. And our offering really helps you to save money and enjoys a very simple renewal process. So you can spend more time with your clients and on the other important things. We also offer a cyber insurance solution called Cyber Shield. And this is designed to protect your accounting firm after you receive a cyber attack. And I would, again, like to thank both yourself and George for allowing us to sponsor today, and back to you two.
Thanks very much, James, and appreciate the introduction. I think it ties in nicely with the aspect of client service, just because so much of what we see in the data is that peace of mind is really what people are trying to outsource to their accountants. So that's obviously such a big thing there. And without further ado, I'll get on to the topic today, which is the opportunities and trends in client service, which has been based upon over 12,000 client reviews on the FirmChecker platform of not just accounting firms, but also law and bookkeeping and conveyancing firms. So just a little bit about me and why I'm talking about this. So I'm the CEO and co-founder of FirmChecker, and my background is in economics with a particular interest in econometrics, and also have a Juris Doctor degree from University of Melbourne, and have done some further study in marketing with Northwestern University. And George, might not need an introduction, but I'll let you introduce yourself, George.
Thanks, Ben, and thanks to James from myself for the great support we get from Accountancy Insurance in so many things that we do. I'm with Beaton. We are well known to many, maybe not all, as researchers and advisors speakers and authors and commentators in professional services across Australia and New Zealand. I've been a teacher for many, many years in business schools and law school at the University of Melbourne, and with Ben and others co-founded FirmChecker a couple of years ago.
Great, so on to today's data. So as I mentioned before, we have over 12,000 reviews, which feeds into the insights here, as well as the 15 years experience from consulting to professional services firms with a research focus from Beaton. And from those 12,000 reviews, we have over 150,000 unique data points, and over 6,000 of those reviews are of accounting and advisory firms specifically. We're focusing on post-pandemic reviews that have come through to our platform, and some of the survey leading into this year, of which there are 677 reviews and 10,000 data points, which we're basing most of today's trends on. But you'll also see, and of course, the tracking data that will flow through into older data, so we can compare not just segments of the data from this year, but also this year with previous years, and what the implications are for the accounting profession and for people who want to stand out in the accounting profession to their clients. And the reason we think that this is so important is because for most small to medium professional services firms, for the significant majority of the thousands of firms that are out there, repeat business and word of mouth growth is how the significant majority of work comes in. Our data indicate that it's over 80%. So we're trying to help focus your efforts on the things that will differentiate you in that respect, so that you've got happier clients and they're bringing in more clients that are like them. It's a really effective way to grow your firm. So we'll be talking about the trends in service standards across the professions, the trends in perceived fees and value received by clients. We'll segment this data by different practice areas, so you can put into context not just your results as an individual firm across the industry average, but also how you compare to firms like you. And then we'll look at what are the big opportunities for your firm going forward to stand out from the crowd. So George, I'll just throw over to you, and perhaps you can talk about these high-level trends that we see here across accounting, law and conveyancing.
Thanks, Ben. This is for you showing is that client satisfaction measured on the vertical axis, reported by clients of law, accounting and conveyancing firms. It's nudging up each year on the trend line. So if you fitted a straight line through those 4 data points in any one of the professions, it would be sloping upwards to the right. This is yet another study which has shown rising satisfaction with these professions. Beaton's been doing this since 2005 in law and accounting, and it's the same trend, tick, tick, tick. The trend is escalating up. And this means that if your firm is not increasingly satisfying its clients, you are falling behind, is one of the implications. By way of a threat, by way of an opportunity, if your firm can outperform the trend, it means, as Ben was saying, you will be getting more referrals and more work from your clients who are more satisfied than average with you than with other firms and your competitors' firms. So client satisfaction is a really important outcome metric when thinking about why your firm exists, your business purpose, and if you think of this in terms of a balanced scorecard, this is the key measure for your clients. And for the firm, of course, it's professional, and there's nothing like a satisfied client to satisfy a professional practitioner. So it's a virtuous relationship. Thanks, Ben. When we look at the current, this is 2021 data from FirmChecker's ratings, these very large number of ratings that FirmChecker is collecting, it would seem that the law firms are outstripping the accounting firms in client satisfaction, and the conveyancing firms in turn are outstripping both. Now, whilst these differences might seem relatively small in the scale on the vertical axis, they nevertheless are managerially, strategically significant. And it's worth just pausing to think, why might this be so? Why are conveyancing firms doing better than both the other two professions? And why are accounting firms lagging? And our hypothesis, and we have some evidence for this from our clients' surveys, is that the standardized nature of conveyancing, the process orientation, the increasing technological automation of conveyancing is making it easier to produce time after time satisfied clients. In law, the same is beginning to happen. And we know that law firms tend to outperform accounting firms. And that has got something to do, we know from other research that Beaton has done, with the culture of lawyers compared. So the focus on satisfying clients, particularly where there are issues, matters in law that are contentious or difficult or stressing, and the care given to those matters, which don't occur all that often, but are remembered by the client, tends to lead to higher satisfaction. Whereas many of the services of accounting, as we're going to show later today and report on later today, are of a compliance and routine nature. And it's really quite easy to think about, oh, that's taken care of by Xero or MyOb or other reporting systems, and move on to the next job with clients, and that there's an individual on the other end are recognized by accountants. We have evidence that this is so in our surveying, and this poses, again, for the accountants in the webinar today, a very big opportunity to make sure that the people component, particularly the feelings component of clients feeling recognized, satisfied, cared for, is not lost sight of. Thanks.
Thanks, George. And I'll just touch on some other trends before we get into the biggest opportunities for your accounting firms that are quite interesting, and these trends that pertain to value and perceived fee levels or perceived expensiveness of accounting firms. And there is a bit going on in this chart, but I think it's worth bearing with me here because the takeouts of it are quite significant. If we look on the left-hand axis, this is sort of a dual axis chart. We've got the ratio of fixed fees to hourly rates. And you can, so that is for every fixed fee piece of work as rated by the client, how many bits of work were done on an hourly rate basis. And you can see that over the last 3 years we've been surveying, the number of fixed fees relative to the number of hourly rates has been increasing. In that time, it would appear that there's been a slight decrease here on the right-hand axis with the pale blue, you can see, in the perceived expensiveness of the matters that are being performed by accounting firms. And why this is worth pausing on and why this is of particular interest, and it's even more stark in law, but it's because this is independent of the actual price itself. So whether or not accounting firms are actually charging any less as they transition over to fixed fees from hourly rates on a relative basis, the perception from clients is that they're paying less, and as a result that they're getting better value for money, and they tend to be more satisfied as a result. Now, this can be put down to a number of things. It can be put down to sort of post hoc bill shock. It can be put down to expectation management. But I think that the fixed fee does force people to communicate a bit better up front. And as a result, there are no nasty surprises at the end, and clients' expectations are managed better. So it is quite interesting. It's even more stark in law, but it does seem to be that there's evidence over time that the shift towards fixed fees has been beneficial to clients, at least as they perceive the value that they're getting, and the how they perceive the expensiveness of the services that they're receiving. And we'll touch on it later again in terms of the opportunities for your firm. but it's also clear that if we take a snapshot in time, so this is time series data, but if we take a snapshot in time of any given group of clients for any given practice area, those that are receiving fixed fee services as opposed to hourly rate services are on average significantly more happy with their the service that's being provided. And that's using segmentation methods rather than asking them what do they prefer. It's seeing who's satisfied and who's not, and controlling for the fee structure that was actually implemented. And over such large sample sizes, that's at high levels of statistical significance. So that is an interesting trend that we're seeing, and also it maps well onto any of the given sort of slice of time pieces of data that we're looking at. And you can see that again here. So this is the data for 2021 specifically, and you can see here the perceived value for fixed fee matters is significantly higher than for hourly rates. And likewise, the perception of price is significantly lower for fixed fee matters than for hourly rates, independent of the actual price that is being charged. So straight off the bat, I think that is an important opportunity for your firm. Somewhere where you can look to differentiate yourself is moving as much of your work as possible to a fixed fee agreed upfront basis. And that has really consistently shown through in our data. And George, I'll get you to speak a little bit about the differences in satisfaction between different practice areas and different types of work that accountants are performing. And hopefully for those of you who are currently using FirmChecker or other client satisfaction tools that are out there, that'll help you put your results into a bit more context and have you thinking about where you're positioned in the market.
Thanks, Ben. So when we look at across from the left to the right in this chart, these were the types of work, practice areas that the clients doing the rating could check as to the service or services that they had used of a particular firm. And from left to right, we've got bookkeeping, then in purple is the average of all the work types, then BAS, tax, FP, auditing, and HR consulting. And you'll see that bookkeeping is the champion in terms of the highest client satisfaction. And again, it's worth stopping for a moment when we look across and say, well, why is that? And the reason we would say, a bit like conveyancing, it's highly automated. Bookkeeping for most clients is a daily or weekly or at least monthly touch point from the firm. So the clients have outsourced their bookkeeping to the firm and there's regular contact. So we call this type of work type relational. It's flow. Whereas if we're going to go across to the right, tax is a periodic or transactional type of service. You don't get tax advice daily, weekly, monthly, perhaps quarterly on BAS, but certainly tax consolidated and infrequent, and that's a transactional service. And as we're going to show, services that are relational differ in their levels of satisfaction than those that are transactional. So in this chart, just to note the relational ones, the ones with flow, in other words, regular touch points with the client in their business, course of their business, month to month, being business advisory and financial planning. The transactional ones are the others, tax, auditing, and HR consulting, which might be a recruitment service or advice on employment terms and conditions, ATO regulations about contractors. That's the type of advisory HR work. So the high for accounting and in more relational practice types, contra the transactional practice types. And in the next slide, we'll have a look at that in another way. The data, when we segmented, on the vertical axis on the left between transactional and relational work types, and on the horizontal axis at the bottom by the client, B2C client versus a business client or B2B client, and how positive the clients feel towards the practitioners and the firm that's rendering the services. And the most positive, you see at the bottom left-hand quadrant, where dealing with individual clients, personal clients, private clients, on a relational basis generates the most positive. This is the caring, trusted advisor who helps out when you're feeling down and in a hole and got financial problems because your debtors have blown out or your inventory's blown out or whatever it might be, where your accountant can provide that advice to you personally. Whereas in the top right-hand quadrant, you get the least positive ratings, where this is tax, for example, business to business service, Albert mentioned earlier. And with tax, as the saying goes, nobody's ever happy. Even if you win a tax dispute, you're never quite happy. You might be more happy than if you'd lost the dispute. But, you know, as James was introducing with Audit Shield, you know, these are stressful, infrequent visual experiences. So those two are an important contrast. And what it says to us when we look through this data at the client experience and research into what clients experience, there are feelings at work here. And we know that a big part of client experience, whether they are private clients, personal, business clients, is in their feelings. Do I feel supported? Do I feel positive emotions? Or am I frustrated? Do I get anxious because it's taking so long? Do I worry because I don't hear for long periods of time? And we can take from this that injecting personal care and expression of the way you serve your clients that generates positive feelings in them, hence the word positive here. Yeah, Susan is really looking after me. I feel applying Susan's advice. I feel confident. I feel secure. I feel optimistic. That's how you want your clients to feel, because the research points to clients who feel like that are more loyal, more forgiving of mistakes, and more likely to refer clients to you. So really positive and virtuous cycle. And it's showing the clients that you recognize them as human beings and relate to them as human beings. It's as simple and as difficult as that. Thank you, Ben.
Well, thanks, George. And I think that that's a nice segue into what are the opportunities for your firms in terms of how you can differentiate yourselves in such a competitive market. And really what the data indicate to us is that for a word of mouth driven market, it is on those softer factors. It is on those factors about how you make the client feel. And I think that nothing really demonstrates it better than this chart. So to give you a bit of background here, through a number of years of research from Beaton and getting tens of thousands of reviews and analysing that data, they were able to derive the top drivers of word of mouth growth and recommendation in professional services firms. We've taken the top 4 in terms of what we use in FirmChecker, because you can only focus on so many things. But those are communication, expertise, reliability, and understanding of client needs. So they're the attributes that clients perceive to have the biggest influence on their willingness to recommend you to a friend or to a colleague. And you'll see here as well, I've got expensiveness. You can also look at that as price. And you can see here in the bottom row of this table, that's got a really weak correlation with people's willingness to recommend you to others. And that has important implications, because I think people can default to hard elements such as price as, oh, you know, we're not winning more clients because we're too expensive, or if we cut price, we'll be able to get X number of clients through the door. But our data suggests that that's not the case. There's actually a very weak negative correlation between the level of price and the client's willingness to recommend you to others. So the first thing we would say straight off the bat is it's really important to focus on things that do actually move the needle on word of mouth growth and on repeat business, because the evidence suggests that these are actually significantly more important. And if we look at this in another way, we've taken this correlation data between the behavioral attributes of communication, expertise, reliability, understanding of client needs, and we've seen what's most highly correlated with recommendation and what's being done particularly well and what's being done relatively less well. Because what this enables us to do is we can see, okay, where are what should you focus on if you're going to focus on one or two things if you want to stand out in a market that's very competitive. And the first thing I would say here is that communication is a very high priority if you want to differentiate yourselves and sort of set yourselves aside from the pack. And the reason is because that in terms of how these different attributes are rated by clients, communication is relatively less well rated, and yet it's the biggest driver of word of mouth recommendation. And what we mean by communication here and what that means to clients, we've got a lot of evidence on that. We've surveyed clients, well, hundreds of different clients, on what communication means to them as it's embodied by a professional services firm. And the key thing that comes up more often than anything else, so upwards of 50% of the time when clients are mentioning different things with respect to communication, the key thing is keeping me updated with respect to the status of my matter. And that's such an easy thing to implement, but something that's so often overlooked by both law firms and accounting firms in particular is just keeping people updated, because I mentioned earlier that peace of mind is such an important thing for professional services clients. If you just keep people in the loop and manage their expectations, then that will improve their likelihood of recommending you. It will improve the satisfaction that they have with your service, whether or not you know, you're providing substantively better advice in other ways. I've just had a question. Can we get a copy of this recording? Absolutely. We'll look to get that over to you. And if we go over to this top right-hand quadrant, you can see here expertise. That would be classed as a competitive necessity because it's been done really well by the majority of the market, and it is really important for recommendation. So that's something that you just need to do well. I guess it's sort of your ticket to the game, but it's not going to make you stand out relative to other accounting firms because everyone's doing it well. And of course, clients are only so well placed to judge your expertise. If you look then, you know, at lower priorities for differentiation, reliability, it's also done pretty well already in terms of doing what you say you're going to do, and understanding client needs. It's already done relatively well, and it has somewhat less of an impact than communication does on people's willingness to recommend. So if you're to take one thing out of this, I would say it is focus on keeping your clients updated with the status of the work that you're doing. And that will yield the biggest dividends in terms of having happy clients, having them bring other clients in, having them, you know, return to your firm when they have a need. It just makes such a big difference, and it's such an easy thing to implement. So another takeout from the data, another opportunity for growth, is that when you are collecting feedback from your clients, and everyone should be, because then you'll not just be looking at what are the average implications of all this data, but how does it specifically relate to your firm? It is really important when you're collecting client feedback to give clients the option to remain anonymous. We built this into our surveys because we found that it does have significantly better results. People are much more willing to be honest if they have the ability to remain anonymous. And on FirmChecker, clients can actually leave private feedback and remain anonymous, so that you know that you're getting their honest opinion, and that's so much more helpful in terms of continually improving your service and spotting those strategic opportunities. And you can see here on the right-hand chart, where we've got the column chart, anonymous reviews or pieces of feedback, whether submitted publicly or privately, as a public review or as a private piece of feedback, they do tend to have a lower average score. Note that it is still a relatively high score, so it's not so much a case of people just anonymously go online and leave and try and trash a firm. Far from it. It's more that it gives people the freedom to be more discursive in their feedback, be more constructive, offer helpful points about how a firm can improve. And often those reviews are actually the most precious to professional services firms, because it's not just a testimonial, it's really helpful pointers on where you can improve. And given that so much business does come from repeat business or word of mouth, I think it would be remiss of most firms not to try and capture this data. Another underused strategy is to respond to all feedback. So getting feedback in a quality way is one thing. The other thing is actually responding to it. And you can see here, accountants are less good at responding to feedback than they might be. We were looking at some of this data for law recently, and it was up towards more like 30% of reviews of law firms were responded to. But for accountants, it's looking like less than 20%. But the reason that that's important is because the average score of a review is significantly higher when it's responded to. And to an extent, of course, there's a correlation, causation error. People maybe are more willing to respond to a feedback if it's positive because it makes them feel better. They feel better about engaging it. But I think that it's probably going in the other direction as well. That is, firms that are actually prioritizing responding to all feedback actually tend to be a bit more engaged with it, and they tend to be caring about what their clients are saying and what their clients are thinking a little bit more. And that with that attitude comes better performance. So even insofar as it just increases the focus on client service throughout a firm, I think it's a good discipline to respond to every piece of feedback that actually comes through, because once again, it goes to that communication piece. It shows that clients are being listened to and that firms do care about the service that they're providing. George, I see you've got your hand up. Did you want to add something?
To the point I was making about feelings. Then I'll just go back to the point I was making earlier about feelings, and feelings do belong in business. When you don't respond to feedback, how does it leave the feedback giver, your client, feeling? Respected, not valued? Quite reasonable explanations of why the silence, why not even a thank you, why not even an acknowledgement, we have received your feedback. Silence is very easily interpreted as a lack of interest, or I'm dismissed. So it's yet another very good example of recognizing the importance of your client's feelings. Negative feedback. If it's negative, you have to turn on, as I like to say, your emotional intelligence meter and say, well, why are they saying that? What's their perspective? Rather than, oh, rubbish, they don't understand. So this data that Ben is showing is strongly pointing to the role of feelings and attitudes and clients as human beings in the exchange between the client and the practitioner and the firm.
Yeah, I think that's a good point, George. And I'd be happy to share as well the data on what each of these performance attributes sort of means as to clients. I did mention earlier that communication primarily means to clients, the thing that's mentioned most when people are talking about communication is being kept up to date. But what I didn't say is that the other things are, plain English communication. Are you making the effort to communicate with me on my level? And then importantly, the next most important thing was actually, do I feel like I'm being listened to? And I think that ties in nicely with what you were just saying, and also the points here with reviews being responded to by firms. And George, I might get you to talk a little bit about the importance of consistency in accounting firms as well, because this is data from FirmChecker, albeit a different sampling method, different data than what you've seen over more than a decade in Beaton, but it actually maps on pretty closely to what you've seen amongst the big firms in the independent surveys that you've conducted as well.
It does, Ben. I'm going to start on this chart with the line right at the foot in italics there. Every client, every time, everybody in the firm. And that was a little mantra or slogan developed many years ago by one of the big accountancy firms that we had collected, which showed very high spread of how they were being rated. In other words, the left-hand axis of this chart, the vertical axis, the standard deviation or the variance, the degree of spread in the results, where each of those dot points is the average, but the spread is very large, was very, very high. And this firm looked at themselves in their executive committee and said, you know, that's probably true because we have got no role models in this firm. Each one of us does things differently in how we communicate, how we respond with our staff, with our fellow partners. To us that they respond differently to clients. The people on the switchboard or in the accounts payable respond in different ways to clients. And they developed this slogan and put a huge amount of effort into training. And they moved themselves from the top left on a chart like this to the bottom right in a matter of a couple of years and are a superlative performer. Because when we look at this chart, superlative performance is those on the right-hand side. The horizontal axis is an average or mean score from on the left lower to the right higher on how clients are rating the firm on its service. And the route to excellence in service is consistency. If everybody in the firm treats every client, every time, through every medium, in person, on email, on the telephone, in reception, in a meeting room, the same way, not cookie cutter versions, but with the same respect and the same capacity to listen and the same willingness to hear the client's views and demonstrate that you're hearing the client's views and to explain, as Ben just said in plain English, what the advice means, then you're going to move to the right. So we can't stress enough, even in small firms where you may have 3 or 4 partners and 20 staff, finding service to its clients and start on the inside before you go outside. How do you deal with each other? How do you communicate with each other? How do you relate to each other? How do you demonstrate respect for each other? And that then will go from the inside out to the clients, to your great advantage, and of course to the great delight of the clients. So consistency, whether it's in law or accounting or other professions, as we've demonstrated, excellent way to become excellent.
And I think that, we can loop back to a theme that we touched on earlier as well, because we now are in the opportunity section. Just to reiterate again, that fixed fees are still an opportunity for professional services firms, particularly in accounting. Although the majority of work increasingly is being done on a fixed fee basis from those who are part of our survey and part of our survey data. If you look here at the ratio of the value that clients feel they're receiving to the expense that they're paying, so I guess value for money is a way of putting it, you will see here that the ratio is significantly higher for fixed fees, and then down to hourly rates, it is significantly lower. So I think that another important takeout, just to iterate it once again, don't want to speak about it for too long because we have already spoken about it in depth, but it is definitely worth trying to provide fee certainty. And I think that feeds into that communication piece, is that how well are my expectations being met? How much do I think that I'm being kept in the loop versus being kept in the dark? And that applies equally to fees as it does to the status of a matter. So I think, a really high level takeout from this that's really important is to start measuring, because as I've said previously, It's one thing to look at the industry averages and say, you know, if I assume that I'm the average firm, then these are the biggest opportunities for me. But you're not the average firm. Every firm is obviously different. So it's helpful to have these benchmarks insofar as it provides for you something to shoot for. But unless you're measuring, it's hard to really track progress. It's hard to identify the areas for improvement that are very specific to your firm. And I think the reason I framed everything in terms of good, bad, or ugly, treat client feedback as an opportunity to stand out, is because we've got well over 400 firms now who are part of the FirmChecker ecosystem, which is really pleasing. But with each and every one of them, the biggest thing when people sign up is a bit of a fear around, oh, I don't know if I want to receive client feedback. It's a bit scary. But it really is an opportunity. If we look at positive client feedback and positive reviews, well, it is an opportunity to motivate staff, to celebrate good results, and to provide more meaning to work. It's also an opportunity for identifying referral opportunities. If we're looking at feedback that's neutral, maybe it's got some positives, maybe it's got some negatives, well, that tends to be the best for generating new ideas about where the firm can go in the future, and, you know, new products, new services, new ways of doing things. That typically comes from neutral feedback. And then negative feedback, I think that is just as important as positive feedback, to be honest, because given that most business does come from repeat business, it does come from word of mouth recommendations, it does give you the opportunity to solve acute issues with individual clients. We've got a number of examples of firms saving significant retainers and really big ticket clients just by getting a piece of negative feedback and actually acting upon it. But also more at a systemic level, if you're seeing consistent themes in, you know, what's maybe not being done well by your firm, then it means that you can nip that in the bud upstream, so that you're not having these issues later on where you're just sort of saving a client by the skin of your teeth when you realize too late that they're unhappy. And when we ran a webinar late last year, I believe it was, George, we actually asked, we asked the firms who were present, you know, how do you know if your client's not happy? And I think it was the majority said they don't pay their bill. So it wasn't, we've asked them, are they happy? It wasn't, we've, you know, been monitoring client service through in a systematized way. It's, oh, we don't get paid. And I think everyone here would rather not know, find out in that way. So I think good, bad, or ugly, it is really important to start measuring. There are a lot of services out there. We are one that combines not just public reviews, but also private feedback, so that you can get the best of both worlds with these opportunities. And yeah, we'd certainly encourage you to try us out. But in terms of another next step for more insights that you can get, which are supported by Accountancy Insurance as well, George, I'll get you to talk a little bit about the Client Choice Festival, which is happening for the first time in 2021 in May. It's a big event, it's very exciting, and George, perhaps you can tell us a bit more about it.
I'll do that. Thank you, Ben. And just before I do, I'd like to tell one more story, if I may. There is a consultancy in the United States, a bit like us. Their name is Hinge, and they published a profitability of professional services firms, like those present today, in a cross-section of professions, and the relationship between profitability and growth correlated with whether the firms collect client feedback by whatever means, whether it's by platforms like FirmChecker, whether it's by formal interviews, whether it's like surveys like Beaton does, by whatever means. What is the relationship between the collection of client feedback and the growth and the profitability of the firm? And the results are really quite stunning, and pause for thought and food for thought for yourselves in the audience. 10 times the growth and twice the profitability. Just think about that. 10 times the growth and twice the profitability of firms, by firms who do collect client feedback regularly, which is defined at least once a quarter, contrasted with those who don't collect client feedback. One of the easiest things in the world is to collect client feedback. better still use it, but nevertheless, the sheer act of collecting client feedback, telling the clients you value their opinion, leads to greater growth and greater profitability. And it really is food for thought in the context of the data that Ben and I have shown you today and the insights that we've shared with you. So thank you for that. And just to explain the Client Choice Festival, this is an online festival, 11, 12, 13 May. There are pauses in it for comfort breaks and to have lunch. If you want to come to the whole thing, you can pick and mix and select the sessions you want to attend. There's a very rich menu of activities and engagement across all of Australia and New Zealand, is celebrating excellence in client service and client care and thought leadership in professional services. We have a galaxy of distinguished people, including some very distinguished finalists and winners in the recent Client Choice Awards announced in March, who are experienced with us in the festival. So we encourage you all to go to the link shown on the screen and sign up. There are packages if you want to bring your own clients, and there are packages if you just want to bring your own staff to the festival. We look forward to greeting you there. Thanks, Ben.
Well, thanks very much, George, and thanks to James and Accountancy Insurance for supporting this webinar, supporting the Client Choice Festival as well, and also the Client Choice Awards. It is extremely valued, and it does help us bring events such as this to the profession. Thanks to all of the attendees of today's webinar. We'd certainly encourage you to get in touch if you wanted to query anything, if you wanted to get a hold of the data or the presentation. We'd be more than happy to send it through. And just before we sign off, I will throw it open to the audience to see if there are any questions that immediately spring to mind that we might be able to answer, and we'd be more than happy to do that. These aren't the sorts of things where people are always forthcoming in terms of the questions that they ask. So I do anticipate getting a couple offline, but I will just leave it open for another sort of 20 seconds or so if people wanted to ask any in the meantime.
And while people are thinking, Ben, just to remind everybody that you're going to provide access to all those who've registered to the materials from today's webinar? Yes,
that's right. Yeah. Okay, well, I think it's a bit of a shy group potentially today, but there were quite a lot of people who logged on, which is great. So thank you to everyone for attending. We'll wrap it up there, and we will send through the report thereafter so that you can have a bit more of a detailed look at it and send us through any questions that you might have. But thanks again to James. Thank you, George. And hopefully we see you at the Client Choice Festival in May.